The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rockin' music means it's time once again for the Option Block, your bi-weekly source for all things options related. A little bit of options wit, a little bit of options wisdom, sprinkled with a generous dose of hilarity. My name is Mark Longo from the OptionsInsider.com, as well as the Options Insider Radio Network. And I am pleased to welcome all of our listeners out there to the old Option Block today. And along with you, the listeners, I am also joined today on the old All-Star panel by two returning regulars. Starting off with the man from Maine, a.k.a. the Rock Lobster himself, a.k.a. Andrew Giovinazzi from OptionPit.com. Mr. Giovinazzi, how are things in the great, great state of Maine?
The state of Maine is doing well. I'm watching Groupon trade like a couple of lobsters fighting over a piece of dead fish.
Groupon, just a beast. This is going to be a fun one to talk about. We finally have some juicy earnings to hit on the show. But before we get into Groupon, we also have to introduce Darth John himself, a.k.a. Mr. John Grigas, holding down the Options Express hot seat and breathing heavy on the old mic because he's excited. He's ready to go. Mr. Grigas, welcome back to the show, sir.
Good to be here. Yeah, I'm excited about talking about Groupon as well. I think this was a stock I liked at like $15, and I really have to eat some lunch here today because this is not looking good. I mean, this is going to be on the OTC market here in about 3 weeks. That and we were all scratching our head today at the desk trying to figure out the VIX with the market down a little bit. What's that, Edgar?
I said with Zynga.
Yeah, Zynga below $3 as well. And I mean, if you look at every social media stock out there, they've all been a great short sell for the last 6 to 9 months.
Maybe with Facebook lockup coming off, everybody's starting, okay, if they start whacking Facebook, maybe they start whacking the other ones. So maybe there's a little. Actually, I think Facebook looks like a decent buy below 19 as far as from an option. That's a different story. Let's get the show going. Sorry about that.
Here we go. As the man says, let's get the show on the road. It's time for the trading block.
The trading block.
All right, welcome to the trading block. This is, of course, where we hit on what's been moving the market, what's been driving the old street today. And as Andrew and John both alluded to, the name moving the old tape today and really lighting up the tape ahead of earnings was Groupon. And they had earnings after the bell. Of course, if you watched Groupon today, it was just a roller coaster ride. I caught the the second half of it or so today, where it was trading mostly around $8. But it started off the day down in like low sevens, and it rallied up to 8. Then towards the middle, later on in the day, it started selling off aggressively down to 7.5 again. And as I was telling these guys prior to starting taping, the volume there is just a bit out of control. Understandably, given these movements and these levels of fluctuation we've been seeing in the underlying. In fact, it's higher now than when it was trading around 6 or so last week. So it's been I know it's attractive for a lot of our readers, and I'm sure a lot of OX customers who are premium sellers to come in and play on the dark side here in Groupon. But right now, they have earnings after the bell, and as we speak, the stock closed at $7.55, up about 11 cents on the day, but well off its highs of over $8 during the day. And in the after hours now, it's been all over the place. It was rallying. It was down to 7, back up to 7.5, and then back down now to about 6.5. I think it got down to a little bit south of this, but it's trading around 6.5. Seems to have caught a little bit of a second wind now here in the after hours, getting some bids and holding firm around the 6.5 level. So I guess maybe, at least for the time being, the most dire predictions of Groupon joining the Zyngas of the world south of $3 have yet to come to pass. I'm sure a lot of OX customers will be happy to hear that. I'm guessing you had a lot of premium sellers, a lot of put sellers and credit put spread sellers coming into the desk today, John.
Yeah, unfortunately, retail is more of a directional catch a shooting star type of trading strategy. We didn't see too many premium sellers. I mean, with the vol that high, though, I could see why it does look so juicy. But I mean, people, ever since Facebook and not LinkedIn, but some of the other Zyngas of the world have done so poorly releasing earnings and just the overall move that we've seen a lot of people just buying some out of the money puts. Really wasn't many people buying the upside. I'm trying to look at some of the volumes here for the 4.5 days we had remaining on these August options. You could see like the August $6 puts put up to over 20,000 today, as opposed to your out of the money calls, which were 12 to 14,000. So people think that this one, along with is going to follow Zynga's suit going into the 3 handle here shortly.
Yeah, Zynga, good old Zynga. Poor Andrew keeps coming up every show.
Speechless.
What?
My volume was far too down.
Speechless for a second. I was like, how does that guy not talk? How does he not talk? I understand this.
I'm sorry.
You know what? No, I used to laugh at the Widowmakers that you guys used to have. Netflix, there was the Cisco, there was the this, and you know what? That's what you get for laughing. You get your own Widowmaker.
We all have our own. We all have our own personal Widowmaker.
The smoke gets blown back at you very hard. I'm glad though I did keep Zynga in its proper place from a risk management point of view, but nonetheless, it was a dark spot in my recent past. I'll just say that.
So you're saying
they're not all winners. You're saying
I shouldn't put 100% of my portfolio into shorting downside puts on Groupon. Put all the kids' college account. That wasn't a good move. Is what you're saying?
Exactly. I'll tell you what though, because I think the sentiment carries like on some of these new media companies. I mean, it really can get stinky. I mean, there's no reason why Groupon can't be a $6 stock tomorrow. It's trading $6.60 right now. So one thing about the sentiment in this group right now is it's really basically, except for Facebook stopped going down. Overall, LinkedIn, I guess, is really, and Yelp is such a vicious short squeeze. But now this thing was just $27 the other day, which was its last squeeze price, by the way. But yeah, sectors getting hurt by, well, guess what? Hey, they're not making the money that everybody thought they would. So that's my 2 cents in that.
Surprise! The Web 2.0 economy is fickle, and it goes wherever it wants. And there's no customer loyalty, no customer retention, and all the other things that we've been complaining about for years. I remember years ago, many years ago, probably 2005, maybe 2006, maybe Business Week did a big front page cover story about all these kind of quote unquote Web 2.0 websites like Dig and others that were kind of getting a lot of heat at the time, and how they were worth so much from these nonsense valuation standards, even though these companies had no revenues to speak of. And it was kind of the beginning of, in many ways, the popular media's embrace and love of the Web 2.0 that has led us to Facebook and Groupon and all these many other kind of post-dot-com bust companies. And I remember just calling into the editors and that and having a long discussion with the author of that article and pointing out point for point kind of why that article was nonsense and why these firms made no money and had no business plan and all these other things, and the things that these Web 2.0 article or audiences for sites like Dig were very fickle and were highly mobile, and certainly that's what we've seen with the collapse of a lot of those sites and some of these other ones. And I think I laid out a litany of points to them. I was hoping they would kind of print them at some sort of, or we could have some sort of rebuttal article going in. They ended up just doing it, I think, as a very long letter to the editors. I sounded like some sort of cranky guy calling it. But it's something that I've kind of just been harping on for quite a while, that this is I ever since, the 2000 implosion, I've been reticent to jump back on any sort of web bubble bandwagon, even though I run several web companies. But and this was certainly one that seemed to me to be just highly dubious. Even Facebook now, I mean, obviously they have revenue, they actually make money unlike a lot of these Web 2.0 companies. But where's the growth for them at this point? They've already come out and said close to 10% of their accounts are essentially fraudulent or fake or duplicates or spam. And then, I mean, you already have almost 1 billion people. What are you going to have? The rest of the 6 billion people on the planet are going to join up there too? I mean, so there's a lot of issues with that name. But this is not the Web 2.0 bashing hour. This is the option block trading block segment. And of course, there was just.
But see, you got smarter, Mark. You instead of buying the stock in the web companies, you started the web company. That's how you make the money.
Yeah, that's where the actual money is.
On the web companies afterwards.
I've made far more money building web businesses than I have trading web companies. I'll say that's for sure. I'll never forget. I think one of the hottest tips I ever got back on the floor from a web. I don't know if they count as web, but .com bubble perspective was when Lucent got south of, I believe it was 55. Everyone and their mother said, you have to own this. And look how well that one turned out. I think the second best one I got was when everyone and their mother said I had to short the Enron 20 puts. It was like free money. This was like IBM going south of 20. It can't be a bad trade. So just a few of the many winners I've heard over and seen many people dive into in my time here looking at these the post.com bubble.
Lucent was the hugest high flyer ever. Like in 1998, I think it was like $120 or some crazy amount. Unreal. Yeah, Zinga below 5. Pile in.
Andrew, are you trying to maneuver something here? Everyone dive into Zynga. No, but Lucent was a crazy one. We had some guys in that pit on the SIBO, and it was a very, very interesting high flyer for a short time, along with Nortel and a lot of those other names that kind of just came and went pretty aggressively. But John, or actually Andrew, you must have in your mentee sessions today, were you hitting on any of these names like Groupon because they were so just out of the realm of sanity for much of the day today?
The option pit party line on Groupon is the stock sucks, and we basically will just need any excuse to not be long it. So it's in line. I think Mark probably has some puts on in there. Actually, we were looking for juice to buy today, like Apple, Google, and stuff like that. It's very cheap, and it's a markets in bizarro world. So as far as those go, that's kind of what we were looking at as far as those goes. We're trying to get people to be careful about playing the short juice on any of these earnings lately, just because for the most part the move has outperformed the juice. And I think because the market is so illiquid right now, we're going to probably see that more than we're used to. I don't think we've ever had this really. It's been a while since we've had so few participants really in the market with some of these things. So that's what we have been cautioning, yes.
We are primed in this environment for a lot more wild swings, and I think a lot of us would be accustomed to normally. It is summertime. So we get these kind of aberrant movements that seem to have no sense behind them. Speaking of no sense behind them, I think it was about almost a month ago now, because it was our last live Volatility Views show, one of our other programs we do here on the radio network. And we had someone write in to our team and to our to our panel on that show and say the VIX was trading around, I think, high teens at the time, and they said, VIX 14 or 40, what's your pick? Which one's going to hit first? So, of course, all of us hit 14 because, that's just the math. You can't argue with the math. But it's sure enough, that still seemed like a relatively low number. And, of course, today, VIX cash selling off rather aggressively, down a whole handle to 1370 today. So we typically, on a day like this, we see a little bit of the reticence on the part of the market makers who dumped all that premium going into the weekend. They put a little bit back in. Even on a day today with a sell-off across most of the major indices, we see some of that juice coming back in. But we saw neither hide nor hear of that in the old VIX cash today, with it selling off 7% into a relatively unched/down day. That's a relatively interesting development. I don't know. I'm starting to wonder if we're starting to undervalue vol a little bit too aggressively in this environment, given everything we have going on. You're right, Andrew. Names are swinging much wider than we would in the typical environment like this. We still have all these rumors and percolating issues coming out of Europe. I'm starting to lean towards, and I know you love it to be the degenerate juice buyer on the team, Andrew, but I might start leaning into some of picking up some premium here at these levels.
I think so, too. I'm actually just putting out a couple of things for our strategy letter tomorrow. I haven't quite decided which ones. Not as thrilled about buying the gold because I don't know if it's basic. We're still waiting kind of for ECB-esque stuff. If they print, gold rallies. If they don't print, the longer they don't say anything, the more gold kind of just sits and does nothing. But like Apple and Google are both, so you know what? Nobody knows what to do, so they buy Apple and they're buying Google. And they're just crushing the volatility in there. So those, to me, are really probably the better times to buy juices when everybody just is selling it because they don't else know what to do. And I think that's kind of classic. And the good thing about the big names are like that is you don't need, although you are playing on the $100 blackjack table, you don't need a lot of movement to make them pay. And I think you're going to, I'm seeing IV 30 lows all across the board. I don't think that means you go back up the truck in August. But September is, it is starting to look very, very interesting. Let's just put it that way.
So you're saying in this flight to quality then that people are not flying to Groupon? Groupon is not quality? Is that what you're saying? It's not a safe haven. Not a safe haven for your dollar in this environment.
They are not tripping all over themselves for Groupon today. I cannot believe that. Let's see here. They're just... where is that now? Yeah,
it's hovering around 6.5 still, so it seems to have caught a breather here at 6.5. We'll see if it continues to the downside or rallies or kind of settles in around this level. But yeah, Groupon, right? Not exactly a flight to quality. Of course, this morning it was trading over 8. Someone was flocking into Groupon today, so there was someone.
Yeah, I think that's covering. It's like Yelp. They covered Yelp up to 27 or something again. I think the hard to borrow names are just really. They are very squeezy. They rally on nothing, and generally to me that's always just some heavy short interest or guys have been you're shorted from $20 or $22 and now it's trading $7 and you're like, well, how much do I want to get hosed tomorrow on another? Look what happened to Groupon last time. Wasn't up like $4 or $5 on what apparently is a total sketchy revenue situation with those guys. They haven't quite figured out how they're going to recognize revenue.
Yeah, they've been down that road several times.
Some revenue's good, other revenue are going to count it more. That's like at OX, okay, well, this customer, we're going to count his $5 like it's $2. And then this customer, we're going to count this commission like it's $10. It's new math. They're doing new math with Web 2.
Well, of course, speaking of Groupon today, before we close out the old trading block here, they did some, as we lead into the odd block, we'll give some numbers here for Groupon. Of course, stock-wise, they did about 3x today, about over 25 million shares, and on the option side, 6x. It was over 134,000 contracts going up in Groupon today. So a hot day for GRPN. But I think with that, and speaking of hot days, we're going to close out the old trading block and dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
right, and that funky tune means it's time for the old odd block. And today we're going to kick things off with a blue chip name making, I believe, its first appearance here in the odd block. I don't think we've talked about this one in the past, which is surprising. Of course, his name is not exactly one you associate with heavy, unusual activity. It is GE, good old General Electric, closed today at $20, about 21 even on the day, essentially down about 0.5%. And we saw the name kind of consolidating this afternoon. It was trading higher over the past few weeks, since has kind of come off a little bit. But in spite of these moves here in the underlying and what people might be, some of the technical guys even might say a bullish flag pattern, you know, if you listen to the show for a while, how much stock I put in those technical indicators. But that aside, we did see some relatively interesting and sizable options activity in GE. And it was interesting for a couple of reasons, because it was A, it was so sizable, and B, it was kind of the inverse of what we typically see with a lot of these spreads. What we saw coming into today was a massive October 22-23 ratio call spread going up, about a little over 2-to-1 on this one. But typically when we see these, and we've seen these a number of times on the odd block in the past, we've seen someone coming in to pick up some calls and then selling the upside juice against it to reduce their overall premium outlay, or maybe even turn a debit call buy into a credit outright by selling some upside on some ridiculous ratio. We saw the opposite of that today. We saw someone coming in selling 45,000 of the OCT22 calls for around 20 cents or so, while we came in and picked up on the other side 100,000 of the October 23 calls for about a teeny, actually, almost a teeny. Did these on splits. So a little over 6 cents here. So interesting stuff on both of these strikes. Of course, there is some size open interest on these, about 14,000 and 1,000 respectively, but certainly not enough to cover this paper. This is all opening paper today. And what's interesting about this, like we said, is that we don't see many ratio sales of call spreads where people go out of their way to buy the upside and actually increase their net premium outlay on the trade, or reduce the amount of premium they're collecting. So this is an interesting trade for several reasons here in GE. Someone obviously putting a lot of cash on the line here, that this one is it probably won't pop north of 22, and if it does, it's got to pop sizably for them to actually start looking good on the other end of this. But an interesting spread. You guys watch this one at all, John or Andrew? You guys watch GE at all today? Not exactly one of our sexier names we talk about a lot, but an interesting one today, that's for sure.
No, we do have a lot of callers that do trade in GE. I don't know what it is. Maybe it's a range bound stock, something like Microsoft that they get into at the low end and buy some leaves. But we do get a lot of calls on GE. It's a blue chip stock. It does return about 3.25% annual yield. For a new investor or someone who's new to derivatives, covered calls are a big part of their early trading strategy. So we get a lot of people that will transfer in a large amount of GE stock, and we'll kind of walk through how to sell covered calls and kind of raise that yield a little bit. So it is one of those beginner stocks for people getting into derivatives.
This guy, taking the opposite approach though, with the selling the call, but also picking up in case there's a massive explosion to the upside, picking up a little more than 2x on the upside here for these calls. So interesting stuff. He may have some underlying, given this size, he probably has an underlying axe to grind perhaps as well here in GE. But an interesting trade. You don't see too many ratio call spread sales going up in the odd block today. At least we haven't in quite a while. So an interesting one to watch here. Andrew, you watch this one at all today?
No, I wasn't doing a lot of teaching, so I wasn't scanning or just basically looking for stuff to do today. But I'll tell you what, I do like the leverage of this trade. This is one of those, there's not a whole lot of risk really in this. GE doesn't do anything. This is one of the few types of trades where you put it on, you close your eyes, and you wait till October expiration. Literally, aren't many like that. Obviously there's some sizable risk between 21 and 22, but I think this was well constructed because there's plenty of time to make it work. And I think that's one of the, it's the right way, I would say, to execute one of these 1x2s like this. I like the ratio spreads in general. We do them a lot at option pit in Apple when the vol's cheap. It really adds a little bit of, it cuts the risk down to just buying the calls in there tremendously. to almost nothing really, and it gives people the upside. So I think it's a low vol shot, but I think it's a pretty decent one.
Yeah, I like that he covered himself with a little bit of a kicker to the upside in case the worst comes to pass. It's an interesting trade, like I said, and we always like to highlight these interesting ones. You don't see too many 2x ratio buyers on these spreads, so that's worthy of highlighting in and of itself, usually in the mad race to sell premium that we see in the old odd block. But now moving on to Blackstone Group, ticker symbol BX. This one has seen a little bit of downward pressure today, down about 2% to 1340 on the day. This is despite the fact that it's been mostly positive news coming out for BX today. The company, the ratings agencies reaffirmed their long-term credit rating to A+, and a number of other different developments that are generally positive for Blackstone. And despite that, what we've seen is a lot of people coming in and just gobbling up downside here in BX, coming right off the bat with today. They usually do about 8,000 contracts, doing well over 11,000 today on the day here in BX. And the strike seeing the most of the love today, or perhaps the anti-love, depending on your outlook on BX here, is the AUG 13 strike. People were flocking in to buy the AUG 13 puts, where about 6,000 went up total on the day today against open interest of south of 2,000. Most of this was in relatively small blocks of south of 1,000, picking up. One of them was a big, massive sweep of nearly 1,000 for a nickel, but most of them trading in that nickel to a little bit more range. We saw later on in the session these things starting to get bid up with all this buying activity, yet people were still flocking in to lift offers at 6 cents and 8 cents, even seeing some almost 1,000 contract sweep coming through the end of the day, lifting them for 9 cents. So people are chasing these AUG 13 puts here off no perceivable news really here in Blackstone, and why this one is looking aggressive. So this is an interesting one, a good candidate for the old odd block, because like we said, no perceivable reason why they're chasing so much downside here in near-term downside. We do have earnings are not no earnings coming up, but we do have a dividend on the 13th, which is today. Not too much in the way of if you're trading the dividend play on the AUG 13 puts, you're doing it wrong. so not really a dividend.
That's not going to work.
Yeah. Not going to work too well. But
we've seen the opposite of that here at Options Express. You'll have someone that goes on, they're like, oh, what was it this morning? One of the railroad stocks, guy was selling out money puts, and I'm like, wow, that's a lot of premium for like 6 days. He's like, isn't it great? Sell another 10 in this account, another 10 here, another, I'm like, let's check the earnings and see they got earnings on Friday, and it's, didn't catch that. I mean, so yeah, it works both ways for premium sellers and buyers.
Yeah, that's something you might want to catch if you're hitting bids left and right in some of these names. So this one, interesting one to watch. We'll keep an eye on Blackstone a little bit longer and see what goes on in this name, because of course with a name like Blackstone, they're privy to so many deals. Who knows what someone is privy to in their stock and is deciding to load up on some very near-term downside ahead of some potentially bad news here in good old Blackstone. And speaking of the M&A world, we're going to close things out with Focus Media Holdings Limited, ticker symbol FMCN. Closed today up about 9% to $25.45. This is a name that usually does about 10,000 contracts a day. They did over 60,000 today, so a very, very, very strong volume day for FMCN. Of course, we're talking about M&A. This name was recently going to go private with an offer from a bunch of private equity firms like Carlyle Group and others to pick it up for about $3.66 billion. So the underlying holders obviously liking that, rallying the stock to the acquisition price. Not surprisingly, given all this activity, a lot of the action was on the upside call end of the spectrum. Call volume on the upside particularly was over 4x the average daily volume today, with a lot of the love coming in on these AUG 24s, where about almost 7,000 of these traded today against previous open interest of 7,000. So there could have been some closers in there, but for the most part, this was a lot of opening paper coming in, lifting offers on these AUG 7 calls. We also saw, perhaps even more interesting, looking back a little bit in some of the paper we've seen going up on FMCM, we saw back on the 10th, last Friday, someone came in to sweep across multiple exchanges to pick up nearly 1,000 of the SEP22 calls for $2.25, which they had traded about 3,000 total by the end of the day, so pretty aggressive trading there. And of course, those calls are now trading north of $4. So that's well over $1.50 that guy just put in his pocket on a very, very fortuitous trade. On the flip side of that, we saw someone else positioning for a pop here in good old FMCN back in July. On July 9th, we saw someone coming in trading a pretty sized risk reversal, the Jan 17.5/30 risk reversal. They came in, sold the put, bought the call for $1.30 net outlay to them, I believe. And actually, I'm sorry, that might have been, I think that was a credit on that spread. I don't have the exact numbers up here, but they traded that one, obviously looking for this stock to pop aggressively north of 30. This one, if these numbers hold out and this buyout level holds, that trade is not going to come to pass. And it looks like this was a debit spread here, with this guy shelling out about $1.4 million for this bullish risk reversal. And if things stay as they are right now with FMCN, he's not looking too good on this trade. So he was leaning the right way. He was just a little bit too aggressive on his bid. So there we go. One guy scooping up the near-term upside, did fairly well. Someone else specking a little bit longer term, a little bit farther out, and a little bit more aggressive on the upside. And it doesn't look like, of course, we still have till January, but this deal's probably going to be closed before then. But it doesn't look like that trade's going to pan out for him in FMCN. So there you have it. A number of interesting and or unusual trades going up here in the old odd block. But now we're going to close the page on this segment for today and dive right into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Express Block. This is, of course, where the boys from OX hold down the old hot seat, and I get to have a seat and perhaps a tasty beverage. So, Mr. G, what do you have in store for us in the old Express Block today, sir?
Well, I'm going to touch on corn very quickly because I have a great anecdotal story for the.
It wouldn't be an option block appearance for you without hitting on corn, sir.
I can't get it off my plate. It's just, it's like the first thing I check every morning. I mean, we have a 2-day sell-off here. Us Midwesterners, sans Lobster Man, we've seen some rain here over the last 24 hours. Pretty steady stuff, but not very heavy. Probably good for the crops, but it's just, again, a very concentrated small storm that we've seen over the last day and a half. But the USDA did have a report out Friday. I think it was supply and demand, and this morning they had crop progress. And I won't go into the details of it, but there were a few things that I did wanted to point out for those of you that are still along the grains here. The U.S. Department of Agriculture, in its first survey-based report detailing damage from the drought, cut corn production in the United States by 17%. The USDA pegged the U.S. corn yield at 123.4 bushels per acre, below the average trade estimate of 127.3 bushels. This is down from their July estimate of 146,000 bushels, and the Department of Agriculture has now slashed their corn yield by a total of 42.6 bushels per acre in the last 2 months. So what that pretty much says is that things are worse than expected, and will probably continue to be that way since we've now passed the point of no return for a lot of these crops. And like I said, I did have a story I wanted to touch base on. I'm not sure if I shared it with the panel here, but I know I've talked about it at work because it's one of those things you flippantly say to your neighbors and stuff, and then you get a sincere or actually an answer that maybe you weren't expecting. But one of my neighbors, I guess his father-in-law, is a farmer. And I was talking to him, and I was like, "Oh, how are things going down there?" And he's like, "Well, he owns 10 to 15,000 acres." And I was like, "Oh, really? That's not good." And he goes, "No, he's actually up here visiting for the foreseeable future." And I go, "Well, why is that?" And he's like, "Well, he's over at the psychiatric ward at the hospital because he's just wants to die because he's his corn is completely destroyed. He talked to his insurance company, and they told him not even to harvest it, to go ahead and just bury it into the ground, or turn it over into the dirt, because there was no point in actually harvesting it, because there wouldn't be pretty much anything there. So I guess the insurance covers the grains, and that's about it. I'm sorry, the grains, the seed, and that's what they cover, but they don't cover the expenses incurred with that, especially the fertilizer that can eat up a large portion of a farmer's budget. So things continue to be bad here, and I think they'll continue that way. I know like I said, they've had a 2-day sell-off in the corn and in the broader grains. Sometimes things have to back up before they can go forward. So I got to imagine that's what we're going to see here in the next couple of weeks.
Things are grim in corn land these days. I guess your pilgrimage this year set off really a dark spiral for corn markets, and of course a bullish run for corn traders.
Yeah, I mean, that's why some of the first derivatives ever invented were from people such as farmers that met down in LaSalle and Monroe and LaSalle and Jackson to kind of hedge their crops. And this is the reason that commodities and futures were established. And look where it's grown since the 1800s. But never doesn't make anyone happy to see the Corn Belt suffer as it has this year. And hopefully once we get through this year, we can kind of move past the drought and get it in the rearview mirror. So, like I said, things aren't looking too good for the corn, but we all kind of are self-aware of that. One of the things I wanted to touch on the website, I know that Alex had talked about the Idea Hub, that he was pretty much the founder of that, or creator of the Idea Hub. We also have a new product that came out just this week, and I don't believe we talked about it on the show. I may have mentioned it in passing, but if you get a chance, you can find this. Let's see, on the account overview trade options page. It's basically a spread tool for trading debit spreads, put spreads, call spreads, straddles, strangles, and calendars. We're referring to it as the walk limit. And if you go to that screen, you'll see we have a banner on the top of the screen there, which is a quick start guide. It'll give you an idea how it works, and I'll go through a little bit of it right now. And I'm sure Mark and Andrew will have some questions. Try to do my best to answer all of them. But the walk limit is an order type that automatically works option spread orders at successive price increments to try and possibly attain the best possible execution price within the spread NBBO. Walk limit uses a maximum of 11 cancel replace orders, and that limit order starts at the spread NBBO midpoint, meaning that if you had a call spread that you're looking to get into and it was a dollar bid offered at $1.50, and you're trying to purchase it, the original limit order would go into $1.25, and it would leave it there for a couple of seconds. If it did not fill, it would automatically cancel replace it and go up in 2-cent increments until the order was filled. So kind of something that the retail investor currently does. They try to, I say it's like fishing. You got to put your pole in the water and find the spot that actually they're going to bite at. But what the retail customer has to do before is go ahead and cancel replace, and it can be in the pain of to kind of do that and have all those multiple orders go in. Here it'll do it for you and find the best possible price. Now, a couple of things is that the market may move during that time, which there is some risk. But if you've seen the low vol environment that we're currently in right now, this might be an ideal tool if you actually want to get the best price and don't want to have to move the order yourself. Now, a thing to remember too is that in between the NBBO is kind of the brackets in which the price will only be moved up to. And what I mean that in that example of $1 by $1.50, if it goes in $1.25, the highest price it will go up to will be $1.50. Now, if the market moves to say, $1.25 by $1.60 in that time, it will not go past $1.50, which is the original ask price of the NBBO. So, a pretty neat ticket offering that kind of sets us apart from what other retail firms may have. A little bit more about how the original order works is that when we go in on the first walk limit order right between the NBBO, the order will sit out there for 2 seconds. If the order doesn't fill, it'll cancel replace it and go up by 2 cents and leave it there for 4 seconds. And then it goes up to 6 seconds and 8 seconds. So it does give the possibility for that order to work a little bit longer each time it goes out. We haven't had much feedback on it, so we're just putting it out there this week. We're kind of anxious to see what the how people receive this order and if it's actually a success. But I think just based on what we've seen on the desk, as far as people having us cancel replace their own orders, this is something that they might use themselves and not have to go through a broker. What are you guys thinking, Mark?
I'm looking here. I'm trying to. This is, you mentioned the Idea Hub. This is not in the Idea Hub section. This is in your actual order ticket, right? So you go in, you click on the option chain you want to execute, and then under the order types, this is going to be under the order type drop down. Is that where you find this?
Yeah, it's going to be on the all-in-one trade ticket as an advanced order, and it's only going to be used for spreads. If you go to your account overview when you're logged in, you should see a banner at the top of the screen that'll kind of give you a little bit more details on how it works. We do have a video on it internally. We'll probably get that up there within the next week as well. Kind of shows you exactly what it does. We have, when you place the order, you'll actually see the order move in the upper right-hand corner as we cancel, replace it, and as it gets taken out. It's pretty interesting. It's something that came out of our innovation teams here at Options Express, something we do every quarter. Kind of gives a voice to the employees on the front line, what they hear from the customers, and they, kind of keep up with this order type. So it'll be interesting to see how it works out.
Yeah, I'm looking at it now on this all-in-one trade ticket, and you're right, listeners, if you do log into your OX account, if you're an OX customer, you can click on that all-in-one trade ticket banner there at the top, or if you go under trade, you'll see, different choices, and one of them on the bottom is new, the all-in-one trade ticket. I haven't had a chance. I've only been playing with it for a couple of minutes here, so I haven't had a chance to see this walking limit order in action, but it should be pretty interesting. It sounds like a great idea, and you're right, save people the time of having to manually work, because everyone comes in, everyone tries to split the market, everyone tries to get that offer, and then they try to do that little dance with the market maker. I was a market maker, I've been on both sides of that song and dance, and if you can automate some part of that process, it saves people a lot of time, and I think that'll be interesting. People who are busy and don't have time to work, all their orders throughout the day and don't want to just lift offers or hit bids,
Yeah, and I'm looking. I do see the video is on the all-in-one trade ticket on the right-hand panel. There is a demo there too, so you can click on that and watch it. If you're not into reading, so it'll be interesting to see how it works out. I think it is a good order type. I think it's one that will get a lot of use, and as always, we welcome anyone's feedback on how we can improve it.
All right, so that's going to do it for the Express block, and now we're going to dive right into Around the Block.
Around the Block.
All right, and those car horns mean it's time for our last segment of the show, the Around the Block segment, where we talk about what's coming up. And while we're doing that, we'll give you one last hit on the name we were talking about at the top of the show here, which was, of course, Groupon. They seem to have drifted a wee bit south of the 6.5 handle, trading around 640 now, but they seem to have settled down in that 640 to 650 range. We'll see if that is the same when it opens up tomorrow. We saw a couple weeks ago, what was it with Amazon, I believe, that was trading one way in the after hours and opened up aggressively in the other direction. So who knows how valuable these, or how accurate these after hours markets really are in interpreting the actual results from the company. But of course, coming up on our horizons, we've mentioned, and Andrew mentioned earlier in the show, all of our various widowmakers. One of them for Uncle Mike, and for me on several occasions in the past, has been Cisco. And Cisco is coming up to the on the docket again on the 15th. So just in a couple of days, we'll have Cisco earnings. Cisco getting a lot of love these days. In fact, Andrew, I know you said they were on your radar last week, and you were starting to watch them. Did you put anything on in Cisco, or you have anything cooking in Cisco land?
Actually, I bought some. I just bought some September juice in there. I think one. Yeah, I thought it was cheap, and I thought Cisco is. I understand earnings, but I thought realistically, some of the moves we've been seeing in Cisco lately, the thing can actually move a little bit. So we'll see. I picked the Sep time frame because I'm not so sure about August, but I think it's like a $20 or $15 stock. They're either going to love it or hate it at this earnings, and these bigger cap stocks seem to be kind of holding up. So we actually wrote it up for the Option Insider last week. So I generally just trade the stuff that I recommend because I don't have enough time to look at everything I want to do. So I keep my world pretty small as far as the trades I look at.
So it happens when you live in Maine. Everything else just seems small and meager by comparison.
Yes, when you have all the coastline in the United States in your state, you feel very large.
And you have all of the world's natural resources at your fingertips. It's hard to look farther afield. Yes. So aside from Cisco juice, what else is around the block for you here, Andrew?
I'm also looking for the Italian bond auction to see if the ECB if that really gasses the euro. If that goes well this week, it's because I think at this point now, people are assuming some kind of implicit step in by the ECB. So we'll see if it drives the yields down, which could be pretty good for the euro, and maybe get us out of this funk. And of course, we'll have to fix it next year, but at least we'll have other things to worry about for a short amount of time. And that's why I think, honestly, why the volatility is going to zero right now. I think people are starting to smell that with that kind of dough coming in. Some upside there's definitely some upside is possible again if the market takes that stuff well. So those are really the big things I'm looking at. I mean, everything else is kind of, besides a couple of earnings here or there, that's really the number. That's been our driver for 3 months, so how can you not look at it?
Yes, the oft-referred to triple put that is lurking out there on the horizon between Bernanke and the ECB and the rest of the gang out there, that there's the triple put lurking in the wings to save us yet again should the worst come to pass. So why not buy? Why not sell vol? The Uncle Ben is out there waiting to save you.
Yeah, but the problem is now you got to sell the VIX at 13.5.
Yeah,
so it's definitely a tougher.
That's a lovely
tougher
trade.
Noodle.
All right, and Mr. Grigas, what are you watching here around the block, sir, aside from your love affair with corn?
Yeah, just I'll be looking at the corn. We also have retail sales coming up tomorrow. Kind of a double-edged sword here. As if it does bad, you think the Fed's going to step in. If it does good, it's the economy's rebounding. So either way, it looks like we'll see a movement from that economic release. Also, some small earnings this week at Home Depot. I think tomorrow, Target the day after that, with Cisco falling in line. But the earnings are starting to taper off, at least for the big names. And we'll also be watching that VIX. I had some guys, when we get down this low, people kind of did what you did when we were in the high teens. They say we're going to hit 40 before 14, and now we're talking 10 before 20 on the desk. And I know some guys were. I think they put on that. I had a couple guys on the desk put on that reversal in the VXX, selling the 11 puts from buying the $12 calls for like a 12 or 15 cent credit today. So we'll see if that works out. But I mean, the trend is down right now, and there just seems to be a lot of support was here at like the low 14s, and we kind of broke through that today. So we'll see what happens for the rest of the week. But yeah, for credit there,
Andrew. That's a bold
risk
reversal. That's a bold risk reversal. But I like the credit. I'm not. I mean, the VXX can just.
It could die. It could do.
Well, there's some future premium left in there too. I mean, they got to be a little careful that they don't get taken to the. I thought there was like. I'm looking at it now. The problem is VIX cash. Yeah, but there's $4.25 in September premium, and there's $2 in August premium. I mean, the thing is, if the VIX cash just stays here, the VXX can be down $1.50 in no time, just having the futures adjust to norm, right? Because the VIX futures have almost not followed VIX cash down at this level at all. So they got
6 months out there at 25,
on the bold
right?
side. Yeah, but the VXX is only picking up SEP in August right now, and right now it's 70% September, and that's $5 over. It's or $4.50 over. So there is a lot of future premium compression to come, which will weigh very heavily on the VXX if we don't get the cash
volatility.
So it's a bold one. It's a bold sale. I mean, it could easily happen, but with the VIX cash where it is, I had the VXX $10.50 on expiration next week if nothing changes.
Like we used to say when I was out in the S, that roll will get you every time if you're not.
That roll, yeah, they could get a little spanked. But anyway, but then again, all of a sudden, then the Italians don't sell any bonds, and the VIX is back up to 19. And then everybody's like, woohoo, game on again.
You're sitting pretty. Well, that is indeed going to do it for the Around the Block segment. And that's also going to do it for this episode of the Option Block. But before we go, we like to check in with all of our panelists here and see what's going on in their neck of the woods. Starting off with you, Andrew, what's coming up in the land of the pit?
Adjusting Butterflies this Wednesday, free. Mark and I will be there. So when you put these positions on, as most of us know that have traded, short gamma positions, sometimes you have to do stuff, even with long gamma positions. So we will be doing stuff for free for people at 7:30 on Wednesday, this is a very nice iron fly type position.
Oh, I was going to say, I'll only go if you're doing iron flies. If you're talking iron flies, are go. Yeah. So iron flies, I'm there.
Iron flies, butterflies are all the same. All the same. All the same.
Says you, sir. All right. And Mr. Grigas, what is coming up in the land of OX? I'm guessing, just a wild guess here, that you're going to have some webinars and perhaps some seminars on the new Idea Hub and perhaps also this new order type that the customers can use.
Well, yeah, we got the video demo front and center on the all-in-one ticket, so if you get a chance, take a look at that. We were looking at a report from Option Volume for July. I'm sure you probably have it up on your website or have read it.
Oh, yeah, we had it up earlier this month. That's not exactly inspiring numbers.
No, but one of the articles I did read, or it might have been that link, is that the futures business has kind of seen an uptick recently, and we actually see that on the desk as well. We responded with a webinar that we have up there that'll be going on at about 1 o'clock Eastern on August 15th. It's called New Customer Orientation, Trading Futures at Options Express. It's a site walkthrough, kind of gives you what the research and the order entry and the research for the website, how to find those tools, how to utilize those tools, how to find trades, how to enter those trades. And like I said, we are getting a lot of calls on it. It's a good webinar, and I'd highly suggest it if you're new to trading futures, because the first thing I usually tell people is say your account can go debit when you trade futures. So
yeah, that's something a lot of new futures traders are not exactly used to. They're coming from the equity side, coming from the option side, particularly if they're buying premium. They're used to buying positions and not exactly having that, unless they're trading sizable margin on the equity side, not really having that bite into them aggressively. But on the futures side, it's an entirely different business altogether. So yeah, something that they should certainly be aware of. Well, thank you for that, John. And of course, we want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this program and making it such a success. I'd like to remind you again, if you'd like to learn more about any of the topics we discussed on the show today, then by all means, surf on over to theoptionsinsider.com. You can find the unusual activity, the education, the analysis, the breaking news from the options market, and many more topics, including all of the programs on the Options Insider Radio Network. But that is going to do it for us. So until next time, thanks for listening to The Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.